Hi, everybody, and welcome to the weekly market wrap for September 22nd, 2017. So, we had a lot of things happen this week once again, but it always seems like it's the same story. North Korea comes and rattles a saber here or there, and the markets react overnight a little bit, and then back to where we were, which is buying stocks, making new highs, and having a lot of fun, apparently. So basically, what's happening is that one of the big changes geopolitically this week was that the China put out a statement that they were going to stop their banks from dealing with North Korea. North Korea also heard the Trump UN speech, and that had the leader of North Korea come out and say that may actually explode a nuclear bomb over the Pacific Ocean. So the markets this morning weren't too happy about that, but then it came back to the flat line and we moved on. So I think the bigger event, not as showy, but the bigger event was actually the Federal Reserve meeting this week, where Janet Yellen was talking about what was going on with unwinding quantitative easing and how they're going to let those all that stimulus that they put into the economies kind of run off the Fed's balance sheet. So as that happens, that could be a possible resistance for the market. But I think they're doing it so slowly and so methodical, and it's going to take so long that they've gotten the market to the point where the market basically says, yeah, we see you doing it, but since you're doing it so small, it doesn't matter to us. So that's something to look for. If the market really wanted to use that as an excuse to sell off, they can. But we kind of got through that meeting. We didn't see much of a sell-off. So this week, just kind of looking at the charts here for a second, I'll take off some of those moving averages so it kind of looks nice and clean. This is a weekly chart, and we see from October 31st of 2016 to essentially this Friday, the end of the week, we've gone straight up. We've gone up tremendously. This is the S&P 500 weekly ETF, the Spider ETF that mimics the S&P 500. And then if you take a look at the monthly candles, once again, I mean, we're looking at an uptrend. It's continuing higher. We're higher this month already than the highs of last month. Um, there's not much to say if you're looking at this from a longer term perspective, which is the bulls are in charge. They continue to buy. Um, I guess if you wanted to arbitrarily pick tops and say, hey, this is the top, and it's been a fool's errand to do that, but a lot of people do it, and sometimes one or two get it right. So I think kind of where I stand with things is if I start to see things deteriorate, if I start to see more insider selling than buying, yeah, we will start to get a little more bearish, as we did a couple of weeks ago. I kind of got spooked a little bit, but I was wrong. But now, I mean, we're just going to continue to play what has been working, which is buy them, hold them. We took a 10% winner off of the focus list this week, and hopefully there's just many more to come. And when things change, we'll change. Some of you may have heard me say this before, but if you open the umbrella when the raindrops are not actually touching your skin and falling on you, you may be able to miss out on some of these nice rallies that we've had. So don't let anything but price get you the heck out of this market. So if price starts to turn lower and you hit some stops that you put in, fine. If not, don't let North Korea, Ukraine, Greece, um, Brexit, trillion, $1 trillion deficits, you know, or I should say $1 billion deficits, but none of that should be stopping you. So just kind of keep in touch with what's happening, but just know the bulls are in charge. As far as insiders go, every week we're able to pick up an insider that's buying shares of their own company. Um, that's been successful in the past. This week was Nelson Peltz. He's a huge Wall Street player, and he was buying a company that after he bought it, it went up by 37%. So, and he's buying more. So, I mean, we have some good things going on. So to try and get off the kind of get off the merry-go-round before it stops is always kind of the safety thing to do. But who knows when it's going to stop? This market could go up another 15%, and then correct 10% from there, which is still 5% higher from where we're at. That's why you don't want to necessarily put yourself in a position to prematurely get out of a bull market. And that's exactly what we're in. So hope you guys enjoy your weekend. I know I didn't do much with the charts, but there's really not much to say. I mean, it just keeps on going higher. I mean, when it starts to change, we'll have some news. But for right now, kind of keep doing what we're doing and be a participant. Don't be arbitrarily scared. Let the market scare you out first before you call tops. So have a good weekend. Up here in the Northeast, it's going to be quite warm, so enjoy for you guys and everybody else that are possibly recovering from the storms. Hope you guys are doing well. Appreciate it. Thanks so much.